Hello guys, welcome to a Trading Parrot and to another episode of the Sunday Alpha Special. This is the only video that you need to watch across all the crypto space when it comes to finding the best alpha, wrapping up what happens in the previous week, understanding where are we standing when it comes to swing trading and preparing for the upcoming week. So sit down and relax because we will cover Bitcoin, we'll pay some special time talking about Ethereum, Total 3, Total 2, Bitcoin dominance. And of course, tons of people are asking me if there was to be some sort of decent correction, what are the levels to look for? So I'm going to spend special time looking at that for you guys. And if you're wondering why I'm talking a little bit low and softer than usual, less parroty, that's because my daughter is sleeping in the next door. And I was so looking forward to look at the charts and to share some of the things that I found with you guys. So I hope you don't mind. So let's get into it. Tomorrow, Sunday, is the last day to take advantage of this promo on Bluffing Exchange. You can get VIP 1, which means paying less fees, and 1,000 in bonus, 9,400 in real USDT rewards. All you have to do is open your account using the link in the description. No matter how small is the deposit, you always get rewards. This is a non-KYC exchange, so you get to decide whether you want to do it or not. Of course, non-KYC for crypto deposits and withdrawals. Most of the exchanges nowadays for withdrawing into a bank still require KYC. I hope that is obvious to you as well. So first of all, we need to do a clean of the house. We need to clear all the bullshit around us. When looking at social networks, particularly Twitter, I see so much crap there that I think part of the alpha is to discard the crap. First of all, starting with my friend Lark, which is basically saying that RSI was at some point below 25, possibly a 20 on the 4 hour a while ago, and from there we had a pump of 134%. Now that we went to the same level of RSI, that we should be expecting somewhere around those terms. Yeah, of course that can still happen, but the alpha is not very strong, guys. Looking for levels specific of RSI in the past and seeing what happened just by scrolling less than one page back in time is not proper alpha, guys. If you're reading this sort of crap, I encourage you to disconnect, unsubscribe, block, do whatever you want. Please don't let in your life all this amount of crap. We do not have time for this. Titan of Crypto actually is not a bad account, but you know, I just brought it doing something that I don't like, which is again showing, oh, something is oversold, and then showing you the extreme performance of something that fits again in the same screen without scrolling back in time. Move on from that. Titan of Crypto, I'm not gonna unsubscribe it because multiple times I have found good things there, but then you can see other people just regurgitating the same puke and you are with the mouth of them. That is disgusting, guys. Unsubscribe those channels. Same as a rule of thumb, you see someone showing you the liquidity pointing up with the pattern overlapping Bitcoin and you unsubscribe the channel unless the person is criticizing that, because that pattern has played out 50%. Okay, if someone is not telling you that, that is not the full story. Those are either dumb people that don't really have any alpha or just shady accounts that actually have a bad intention to get you to become their exit liquidity. And I'm saying this from the point of view of someone that's still feeling bullish for this rally. I still haven't seen the patterns fully broken on the weekly and on the daily. Therefore, I really cannot lean on towards, well, this is it, it's the end. We are in a bear market already. You know me, when I see huge signs of that, I'm gonna be shouting like crazy. If you miss the video on Friday because you were too drunk, you have to watch the double free fall and look at the timestamps. Go into the end of the video if you really don't have that much time and watch all the area of the ratio. Sorry, what's going on? Ratios. Because, you know, there's like 5 different ratio charts on the weekly time frame saying that we should be in the phase of entering into a bear market. It's not just important to understand the actual message, but also to understand the timing and the shape of the charts to confirm whether we did enter or not into that bear market. Once we get ahead in time, maybe in 2 months' time, revisit those ratio charts and to see if it's confirmed or fully invalidated. Every cycle we do a surprise, and I'm kind of leaning towards we could get a surprise rally beyond that message from that video that we are entering into a bear market. This particular one from Cole Garner says global bid-ask ratio has been a reliable gauge for years. And I kind of agree, okay? If you've been watching my channel, you know that I spend tons of time looking at this, right? It shows you the bid versus ask ratio, the order depth, with colors, with charts, with histograms, in all shapes, in all levels of deviation in percentage of the price. It's just so useful. In this case, he's just using the full book, okay? Remember, we divide 0 to 1, 1 to 2, 2 to 5% deviation, and we look at those ratios of orders above the price and below the price. We calculate the difference and we see if it's bullish or not. This guy's just putting the full order book, all depths, all percentages. And when it's too extreme, making it very simple and using it in the daily, and it's showing you when it looks more toppy. So red is toppy. At the moment, we got a lot of defense in here in the full book. Of course, we look at it into a lot more detail, right? We have in here all this blue or green that is defense, and we got some defense now from 5 to 10% all the way to 0 to 1. So that means that very close to the price there is some defense forming, and we got also on the 10 to 20 that is flipping from being very red into being just neutral at the moment. The last one that we have is 20 to infinite percent that is still big in the red. So somewhere beyond 20% above the price there must be an order that big that is overriding the ones that are 20% below the price. But that is some progress, right? And it's good that we can see it here in detail, and that we can also see this with the colors increasing, meaning that that support is coming in. It's not meaning, you know, it will hold, but at least we get some bulls that are stepping up. Now, yes, it's a sign that we could have further downside. And what do you think? Why did I enter with a long, small size and not, you know, huge position with full confidence? Because there are signs that the bears are becoming stronger in here, and they have already won one battle. So we'll see. Cointelegraph, again, just in, BTC needs to go up 126% to wipe out 3 billion in shorts. Guess what? Most of the people read something like this and they say, got it, that's the alpha that I need to go full in a long. No, price can go up from here, okay? But this alpha is absolutely nonsense. He's calculating just the last 30 days. Number one, that is definitely not sufficient to become an alpha to say, yeah, let's do it. Let's go with a long, big leverage. We're gonna do it. No. In the longer term liquidity, there could be some liquidity that doesn't appear here. It's just hidden because it's using just last 30 days. Anyways, just skip it. Just continue just watching the trading parrot. Here, everything is transparent. I'm always gonna tell you what I see. If I don't know something, I won't talk about that. There's nothing I hate more than talking about something and really bullshitting. BTC daily time frame has continued its downtrend since breaking down from the rising wedge. If 108k support fails, we could see 100k level again. That could align with the 50 weekly moving average reset. So this all sounds familiar. I think I'm not watching any YouTube channel, but I'm noticing that Anoop, which is former channel that I used to watch a lot 5 years ago, has come to very similar conclusions. Well, guess what? I was watching him, so I got influenced with the ascending wedge. He put the same ascending wedge that we already have in our daily chart. I think it's here. We talk about the breakdown from the bigger falling wedge, and then we created in here, from the ascending wedge, and then from the falling wedge that formed in here, we say that we have a breakout into 14k. Now I made it more like a parallel channel. As you can see in here, we'll talk about the daily chart in just a few minutes. We extensively talk about the 50 weekly moving average. We compare it with the poor performance of the bull market support band, again in the same video of double free fall. Did I say it? You have to watch it. It's been 1,053 days since the November 2022 Bitcoin lows at 15k. Previous cycles lasted 1,064 days. Is the cycle peak near? Well, this is Bitcoin archive. It's just an interesting fact. We do not have to end in the same day or anything like that. If anything, I think the cycles are becoming longer and longer. They're not perfectly aligned with a year. Something that is good news, just today, Tether minted was $1 billion on the Ethereum network. Now covering a little bit of things about the general markets. Remember, this video is going to be packed with alpha, not just on Bitcoin, but on general markets, on altcoins, Bitcoin dominance, and all of that. So make fully sure that you know that there are timestamps underneath in the description if you want to skip anything or pause and then resume from where you left. And we do care about Japan. Japan 10th-year Treasury is at the moment at its highest level since the global financial crisis. And, you know, we've been monitoring Japan, and people ask me, why do we care about it? Well, it almost pushed the VIX this year almost as high as during COVID in just a single day. So definitely is one of those economies, not the only one, but one of those economies that are going through a lot. And it can definitely be the elbow that hits the bottle and breaks, makes a huge mess. But here I have also some bullish narrative for the general markets. Ryan is saying, want to make your favorite perma bear mad? The S&P 500 is about to be up 5 months in a row. A year after 5 months win streaks, higher 28 out of 30 times and up 12.6% on average. So just 2 years out of 30 were in the negative after those 5 months. And those 2 times that were not up, they were at 0.7. In one instance, it was minus 12%. So that minus 12 is basically the 1 out of 30 that ended up pretty much in a bad situation, we could say. And this is a narrative that goes basically against mine. Remember, I've been talking about the falling wedge on the DXY on the weekly, that we had a breakout. That's all part of the same video I'm encouraging you to watch. I won't cover that in depth again, but this particular narrative is completely against what I'm saying. So I want to mention it to you. Let me phrase this more appropriately. Over the past 12 months, there have been 168 rate cuts by central banks worldwide. Yet the US dollar still experienced its worst performance since the 1970s. We are in the early stages of a multi-year decline in the US currency, in my view. The recent consolidation in the DXY, the one that we are kind of spotting since May, after testing a 14-year support level, may be creating confusion among investors, but I believe the long-term outlook remains firmly in place. This global shift away from US-centric assets is a trend I wouldn't be against. Unfortunately, I really cannot read here properly why he thinks that. I wish he was a bit more clear on what's the argument against it, because yes, we have, pretty much since 2011 a support in here on the DXY, and we are consolidating around here. We're getting bullish divergences and a breakout confirmed from the falling wedge with a higher high on the RSI slightly, but yes, it's still a higher high, and the 21 weekly is holding us. That together with the VXY, with the hive and being held together from the 21 weekly, they are calling for some move up, some volatility incoming, this time to the upside on the dollar, and putting compression against every single asset if it plays out. Of course, he's saying that this is just confusion and that this should potentially break down. Some other people think that this could do just a small rally. Remember that we are talking about the most conservative is to get into $100. From there, we can see a rejection. If we see a strong rejection, we might risk losing the 97, in which case we are in the territory of a multi-year breakdown. Okay, so we are open for that situation in case this really loses steam as it comes up and we approach the $100 mark. We are well aware that that can happen. That's the invalidation of reclaiming $100 and having further upside on the dollar. The S&P 500 not super overbought. The daily chart book states that most of the times when we are really overbought and we are due for a correction, we get into levels like 13, 14, and 15%. That's above the 200 daily moving average, like in these areas in here, but this time we are only 10% above it. I think for me, this is again just a bias in the recent price action that you see in here and not necessarily looking that much back in time. So careful with this sort of charts. They kind of bring a narrative that they just want to squash into your mouth without really giving you the wider perspective for you to understand the actual alpha, if there is a substantial alpha alpha or if it's just crap. So today there are not big news at the moment. There's just kind of a summary of what happened this week, and the biggest takeaways this week were all around the ETFs, inflows, outflows, which we're gonna cover, but we ended up closing the week pretty ugly. Then the record expiry on Friday on options with a max pain at 110, and now monitoring the levels of 106 versus 110. Those are the two levels that are being mentioned in this news. Remember that post options expiry there is a period from 6 hours to 36 hours to understand whether after the pin is gone, if the price is actually going to move somewhere else. Up until Friday, the motivation was to keep the price at 110. And I asked my community as usual, what do they want to include in this video? And we got a few questions. What are the most likely levels of support incoming? We're going to cover that. Do you think total 2 and 3 will break into new highs versus last cycle before 2026? And I'm going to cover total 2 and total 3. I already have that chart and I'm going to give you my take. What will get you to consider opening a short at this time? Very short answer, a move up. A move up into 114 or 117, some level of resistance that I can start thinking, here again there is weakness. I'm not going to enter a short as we are consolidating at a level that could turn into support. Yeah, there is 107 right underneath us, but we could just pinch that and very aggressively claim back up. I need strong confidence to enter in a short as usual. Do you think BTC dominance will have another leg up before collapsing, or is it likely with the ETF that BTCD will stay high? Well, I have covered Bitcoin dominance pretty much every day, and I will do again today. I think it's been forming a double bottom, and I've been talking all the time that we can go over 40, and we've been already around 41, 42 this week. Kind of retrace back in here. It's about to complete the week in a double bottom, so it depends how we close this week with this double bottom, how high I think it can get. If it is right here at 39, based on the high of this pattern, we could get maybe into 47 to decide if we can reclaim the ascending wedge. From this strength, I think 48 is going to be a strong resistance. But if this grows bigger into 43 and we close like that this week, we could re-enter the pattern. At that point, getting into 60 becomes a lot easier. Last October was red for alts and green for BTC. How likely is that to happen again in your opinion? Well, last October was right after a September that was 7% in the upside, and in between September and October, if Bitcoin took a dip, which is not visible here, it can drag the altcoins as well. Then into October, it kind of recovered, but once it found that new range, it allowed the altcoins to do really great into November. So it's always about Bitcoin finding a new range after having done some bullish moves, and then once it settles and everybody agrees, okay, this is going to be the new range for Bitcoin, then everybody says, okay, Bitcoin is done, let's move on to the altcoins. And that's where you see the most confident moves in the altcoins. But since Bitcoin now is in the period of, well, I don't know if I'm really going to find a new range to the upside, I might as well find a new range to the downside, a previous range. That's why the altcoins get so tense. Let's look at general markets, things that are important. Fed split widens after September cut, weak jobs and sticky inflation. Cuts not on autopilot, but are uncertain. That's a 5 out of 10 for BTC. US-China trade chill deepens, signals broader tariff trade war drag, growth risk is more than stimulus odds. That's at 4 out of 10. And in Middle East, some risks. Oil upside risk likely adds risk of burst plus inflation pressure. That's at 3 out of 10, quite bearish. The PCE though, on the flip side, the inflation is steady at 2.7% year on year. The core is 2.9%, and that was considered as expected. That keeps October cut odds alive. That's a 6 out of 10. Remember that there was a tariff expansion on Friday covering drugs, heavy trucks, and furniture that is supposed to start in October 1st. So we don't have at the moment anything incoming really bullish apart from just that priced in expectation of a slow and steady interest rate cuts incoming. When it comes to news for this week, well, the most important probably is going to be around the unemployment rate, but that's on Friday. We have manufacturing PMI, jobs opening. So the main focus is going to be on whether there's anything broken in the jobs market that could force a larger rate cut. We're going to start looking into the charts But of course, if you know about my Telegram channel, which the link is in the description, you already have access to all my charts, which you can see people are like crazy in here requesting them. All my charts are available on Telegram for free in any of the posts. Just click on TTP charts and you can find them. You can request them with a menu that makes it extremely easy. And remember, if you missed this week the news, I consider this extremely important, is how much it has shrunk the RESVAL, which is the Federal Reserve balance sheet, from 3.4 trillion into almost below 3 trillion. So that's more than 10%, almost 12% down. So let's go into the territory of swing trading. Let's understand where we are. Remember that at 111 we entered with a long. Previously we took a long at 112.5, but we closed it at break even because it went into 114. At that point I announced in my Patreon community that we needed to put a break even stop loss. Why? Because it was high risk that we might not get into the scene of the crime of 115k, and we didn't. Therefore we used the close break even. After that we entered again at 111. That was support. Support got lost again, and that means that we have a second scene of the crime located at 111.5. I am flagging it here in red. Remember that we are on a weekend, and CME closed roughly at 109.3 on Binance. On CME it closed almost at 110. That's a premium, and anywhere we go we could form a gap to the upside or to the downside. To be fully honest, since we close pretty much in the average of this very narrow range, what I do prefer is a dump within the weekend. A move over the weekend into 107, 106, 104 can bring in a decent opportunity to average down, thanks to leaving a gap on the upside, which is not necessarily going to close in the first few days, but we leave there some sort of insurance liquidity above the price that gives slightly more confidence to add slightly larger, averaging down more. So then when we come back, possibly, not for granted, remember in here we didn't do it, but if we do come and visit his goodbye at 111.5, just because that is the scene of the crime number 2, well, we do it with a little bit slightly higher risk to reward than if we didn't have that insurance. Well, I have updated the Bitcoin status sheet. I'm gonna share it with my community. The most important things at the moment is that on the 4-hour we are in a painful retest after a bullish breakout, but on the daily we just pierced the support and we haven't yet reclaimed support. So once you pierce support, if you take too long to reclaim it, it kind of gets confirmed. So on the daily we're gonna have to look into where is the global support, because after we broke this support, all we have below is the global support. So let's have a look at where is that price. Let's understand where is support, the final one on the daily. So if we break the global support on the daily, the weekly time frame might break as well, in which case we need to understand where are we standing really. We are in a long, and it's no more important than ever to understand that. So start with the 4-hour. 4-hour had a breakout in here that happened on Wednesday. This is the one that we traded. It got into resistance at 52 and it saw a rejection with higher low. Bullish divergence on the 4-hour confirmed. From there we are going up, but we haven't taken yet the previous high. That is 48, and at the moment we are at 35. So if we want to take the 48, we get a breakout of decent quality, more quality than the one before from here, in the sense that this spans all the way from here, all this white line, instead of just this small white line. It's not the most or the best quality ever, the best quality ever. Let me draw it. It will be something like this, the RSI doing something like this and breaking out from here, from the low end. At the moment we could break out from 45, which is not very low, so it's not the best quality ever either. Global support is at 22 in case we want to break it in the next few days. We need to be prepared for that, and that support at the moment is sitting at 107. So closing 4-hour below 107 is closing this 22, and we again break the global support. Can that happen? Sure, it can happen. So far we are defending these lows of 107. I'm surprised that we haven't gone into 106 to take that liquidity. This liquidity of this double bottom is the largest in the past 30 days. And as I mentioned on the daily, I have very similar pattern now that I know compared to a noob in here, and I got this parallel channel as well. If we visit the global support on the daily, I have it at 26.47, and as you can see, we broke the green daily support at 39. We tested, and currently we are sitting below it. We haven't reclaimed it, and ideally we should reclaim that as soon as possible in the first 2 days. So pretty much today we should reclaim it, otherwise it's gonna get confirmed that we lost it and we start increasing too much the likelihood to go into 26 RSI. Going into 26 RSI means in this parallel channel to meet with the red line at 102.6. those are in confluence there, the parallel channel bottom with the 26 daily RSI, with, well, a little bit lower, but yeah, 99 is this order block in here, very important as well, slightly lower than the 102.5 of the global support on the daily RSI. Resistance from above is at 58.62. More or less we need to break outside this parallel channel to break on the RSI. Breaking on the parallel channel and doing it before the RSI is not a great thing, so hopefully we have the strength to actually break the RSI too at the same time. You know guys, I don't like breaking price patterns and not momentum, because it means that momentum is not with us. On the CPR of September we are below it and we couldn't manage to hit the first resistance of 119.5, and that says in the pattern that our bear flag is still in play and that it could find support at 102.3. that is the first support on the CPR. I'm not gonna go with all the explanation of the 50 weekly MA, watch my previous video. This gave me all the alpha that I feel I need in case, one, we break the bull market support band, and if we break it, where is the next level of support? That's the 50, in my opinion, weekly moving average, which has held the price but also has acted as a flip, right? Once we are below it at this timing in the cycle, we risk coming back into it as resistance and confirming a bear market. So we do not want to go below 99 in that sense and stay for too long in here and then coming back and meeting with the 50 coming down. At that point, if you do it at 107, that could turn into confirmation to come back down into bear market. But anyways, watch that video for more detail. I'm sure I'm missing some important points too. I also cover in that video my thesis of how this could break in here, confirming bear market, therefore also how to invalidate it. Some people are coming to me with questions about these potential head and shoulders that can be seen on the weekly, on the daily, on the 4-hour. It's not perfect, it's got a slope, which is fine, but I want to show you the targets because people are asking, is it valid? But yeah, it's a head and shoulders. Why I don't take it that serious? Well, because we have had plenty of head and shoulder formations in the past throughout this cycle. I remember so many times talking about the head and shoulders and saying, guys, careful, because head and shoulders this cycle pointing to very bearish targets get bought up as soon as they match and they hit the previous resistance. That becomes just a spring and we start a new wave up. When everybody's focusing on the full target technical of the head and shoulder, well, that's where the market maker places the biggest order and they ignite a huge pump. Is it gonna happen again like that? I don't know, but be aware that that's been the modus operandi throughout the bull market. At some point they will stop doing it, sure, but if this play out, what are the technical targets? The technical target number one is from the high of this head and shoulder placed like this, and as you can see, it's kind of breaking down already. So if we place it from 111, that target goes into 88. Now there is another target, as you can see in here, that is a smaller target that I took it in consideration just using this inverse cap and handle, right? Let me draw it so you can see it. It's just this cap with its handle there with a horizontal neckline. So if I place that target in here matching with the top, then I can place it in here and I reach 92.6, which is roughly around this stop on the weekly. Now if the market maker was to do the same thing as usual in this bull cycle, you need to think that you have to trail the target to the downside, because literally they are hunting you in here. If they have conviction that the bull market continues, particularly you have October and November reputation in terms of seasonality says that we should have something big coming in there, particularly if September ends in the red or very little in the green, and in which case mind the gap. If this becomes a liquidity hunt anywhere in here, they can put a huge order and then that becoming the next leg up. Yeah, this week there's been a few signals, particularly the leverage squeeze that we got in here, which is supposedly a very good quality signal. It just pushed up 1% and then it puked back down. That has happened in the past, but not very frequently, I have to say. We are still roughly around the signal. When you zoom out, you can afford a little bit of downside after the signal, but we'll see. Not all the signals play out. And the same goes with this pinch that we got in here of the SOPR saying that too many people sold at a loss in this candle, and we got a buy signal in Ethereum and on Bitcoin as well. So those not necessarily always play immediately, but they've been extremely good during this bull market and even during the bear market. So if it's not immediately playing out, I just don't care. It could play out anytime. On the monthly, you can see that we are holding this support, and I got something new to say about this chart. So we got that support at 66. If it breaks, let's say in the next month, let's assume it breaks, it could go somewhere into 61 and then come back and do something like this if we repeat past performance. Look at how we did it in here. We broke this support on the monthly in the past cycle at 66. We came back down into 61 to 62 and we rally into 70. Okay, so just repeating that will mean from 66, same area of contact in here, and we go into 61 and then we do a revenge rally. So where could that 61 be on the monthly chart when using reverse RSI? So that support, that 66, that first support touching it is right there at 105.677, and then going into that 61 and a half is roughly around 100k, and then rallying into 70 from there, I will assume that will be a new all-time high. Just so you know, you have to have in your understanding what does it mean to repeat 2021 in the context of 2025. In yesterday's video, I also covered the top bottom weekly, and I gave you what it means to go into support of the 12 years of support only broken once, and what happens if we move this line and we place it like this. What does it mean for price to go into 0.39 negative, which is also an option. And with those two levels, I gave you a range. Watch the video from Friday. Here is a new alpha. We haven't looked into this chart for a while. This is the spot and futures volume ratio. This is showing the areas where spot was dominant versus futures in terms of volume, and that means areas where we can be a bit more confident about price action coming down, because it means that spot is buying the dip with more dominance compared to futures. Futures is more speculative and they tend to buy, but then they close in a small profit and they go home like I do. Of course, I'm not providing the best experience to other traders because I'm taking profits very quickly, trying to maintain my win ratio at this late stage of the cycle. But you can see in here that interestingly, from around August into still now, we got spot dominant. It's just like in these areas where price was taking a retracement, and in here, and here, and in here. Interestingly, in the later stages of the past cycle, in the last rally, it was absolutely futures dominant. Therefore, there was profit taking around here, and that was it. There was not strong pillars based on spot. Now we kind of have it dominating apparently according to this chart, if we can trust this chart, of course, and that should be bullish. That's the kind of takeaway. We are in a season of liquidating primarily longs, which means more than a month and a half, and as we approach October, probably we're gonna turn into 2 months in the first week of liquidating longs. During the bull cycle, more than 2 months is too much liquidating longs, and it has to flip into liquidating shorts. If we extend that more than 2 months, it starts looking more like a bear market. In a bear market, it's a continuous of liquidating longs. If we are still in a bull market, after the first week of October, we are overdue to turn into liquidating now the shorts. Long-term holders have been distributing not at a huge fast pace, but steadily reducing their position, which is a bit disappointing. But given the fact that when we were going up, they were accumulating and now they are reducing, so basically they are losing, which is kind of unprecedented. They tend to be the ones that get it right. We have 400 in outflows from spot ETFs, which is quite bearish. 248 on Ethereum this week was kind of devastating for Ethereum, starting from the 22nd, all in the negative. 33 in fear, still not extreme fear. On servers, I'm really impatient to start seeing a warning buy, but I guess we need to get a little bit more of downside to get to the warning buy. I'll let you know once we get that, because in a bull market, that supposedly is a great signal to start paying attention to build more decent sized longs. Number one is gone this week. That level of liquidity of 110 10, we have very little distance from number 2, and it's the largest one of short-term liquidity, not just to the downside, but also to the upside. This is short-term liquidity. I consider very low likely, but possible to go into 1, 2, 3, or 4 before taking number 2 on the lower end, because it's just such a low-hanging fruit and such a huge fruit at the same time that leaving it there will leave me like scratching like, what? Why did we leave that? Where is market maker? What are they taking? And the long-term liquidity shows number 2 on the upper end, the biggest one still. That is 107, in case you want to pause the video and take yourself a picture with that in the background and then send it to me via Telegram or Twitter. That will be cool. And now we have big liquidity, and over a weekend the volume goes lower and there's liquidation levels very close to the price. People betting on 110 and people betting on 108 breaking are kind of having an argument in here. Well, the typical outcome is that both get liquidated. Going out of that area, we are gonna have 114 and 119, the biggest liquidation levels, once we take these two, which I pretty much consider both gone by Monday. This week, if you've been living under a rock, there was a massive long liquidation, followed by one that was way smaller than this. So if that trends continue with smaller liquidations of longs, that means that the momentum to the downside is dying. Not necessarily to stop going lower, but maybe slowing enough to have some dead cat bounce or something like that. That dead cat bounce, the most conservative one, is the first scene of the crime, which is 111 point something, 0.5. Getting lucky is getting into 114, at which point I'm gonna be already in profit and saying, okay, let's start putting a break even stop loss again, and let's start looking for a short at the same time. The full week, the purple whales have been completely chickening out in terms of taking longs, and considering that they kind of lead the pack in the right direction, brown whales are again bringing in some new long positions after taking some losses in here, I will assume, but purple whales still no interest on anything. You can see that shorts have increased. I think there is a huge delta of shorts that still don't get what they deserve, which is proper liquidation. Longs are coming back down and down and down after liquidation, post-liquidation. There is a kind of more clear support in here, but we cannot really take away a lot from the order book on the weekend, particularly the depth, the ratios, because this on Monday can completely flip upside down as soon as New York opens. There is though resistance at 110 with 165, and then we got plenty of levels of 1K spread across 109 to 107, and probably that is influencing these ratios that are very close to the price, that are all in the green, some of them flipping from red into green, and we got a huge amount of funding rates in the negative in here. That means that more and more shorts are entering at any price, paying fees to the longs at the moment. So I think it's a matter of patience to start seeing some sort of liquidation of shorts. Remember that 113 we got a chunk of open interest that opened right there, and that tends to attract the price as well, and we got this delta of 300k putting the shorts at higher risk. It looks beautiful all the way up with fair value gaps in the green of daily and 4-hour time frame. You can see all the prices they are located. The fatter ones at the moment are at around 114, that I really don't understand how come we didn't close it until 115. That was very likely, but very likely is not guaranteed, so it's fair enough if it didn't want to go there. The second scene of the crime ends at around 111.5, which is around this area, so it will take maybe just that fair value gap. Below the price we got these fatter ones that can either hit the liquidity pool of 107 or we go into 102.5. Remember that level was resonating with multiple indicators that I mentioned earlier in the video. Here there's something extremely interesting that I found out today. I was looking how we enter in the bear market from the point of view of volume profile. You can see that we have this rally into 69 and then we came back down. The first support was the point of control of all this range. I anchor the volume profile to September, end of September into October in here, because that is when the last rally starts. I wanted to see that volume, where is the point of control, and it was at 48k, 47. Then the price came back down below the point of control, it lost the range and it came back into the point of control to give the kiss goodbye into the bear market. Why did I do that? Because we have this symmetry in here of the three tests with bearish divergences, like you can see in here. I have it in red flag here and here, so I was looking for some sort of symmetry as as well with the volume profile. So I anchor it again into end of September, October, and we already know where that point of control is actually 96. Interestingly, 96 is double 48. So why? I don't know. But well, let's say 96 is our new point of control right here. And let's imagine the price collapses from here and it does something like this. And then it comes into the point of control, gets a rejection, and then it does. I'm trying to do pretty much the same I am seeing in the previous cycle. So you will get something like this. Okay, I'm gonna draw it just until there and see if we get something like that if we do enter a bear market. So if you do something like this, well, what you have to do is think, where should I place my DCA orders, right? We got one at 111. Where do I place two more to elegantly exit at 95, close to break even or slightly in profit? And I'm gonna give you that homework. Write it down in the comments as an exercise for the weekend. Yeah, learn to DCA, learn to project things based on volatility and things like that. If it doesn't play out, doesn't matter. You just enter with one or two orders and then you exit with a pump. But if it does play out, you are prepared for that scenario. Good for you. I'm not gonna cover again the DXY. Let's look into gold. Gold is still at the highs. Nasdaq closed a week in the red. There were plenty of days for the S&P and the Nasdaq this week in the red, but S&P is kind of with a candle of indecision in here. The Japanese government bonds 10-year yield, you can see that they are in a bearish pattern with a high signal in there, getting a rejection at the moment from there. So my question is this going to break down in here? This pattern of the Nikkei at the moment in Japan is also quite bearish, so I'm looking for a breakdown from there. On the S&P, well, we are approaching this revenge rally, so there's still room to go to really hit the top of the resistance. We don't have to before collapsing or anything, but it's always good to know where is the ceiling, because at that point it starts becoming less likely that the RSI can really go that much higher. Remember that RSI can do something like this, and then something like this, and something like this, and the price can carry on up. That's a bearish divergence, right? But knowing where the momentum tops is always an advantage. We closed the weekend on Friday, I will say pretty much in the green, but not enough to make a new all-time high. We left that all-time high for 23rd of September. That is, I think, Wednesday. And we are in altcoin season index at 71. So not enough for calling it officially an altcoin season, but decent enough to say, well, we might not be done with this move up. Responsibles for helping pushing up are Mix XPL. And I have to admit, neither of them, I knew it before watching this today. APT, of course, IMX, Quant, Solana 1.4 up. So, okay, we closed the week on the USD versus total free dominance around here, which at least we got held by the neckline. We don't have a breakout bullish in here. So that is good for altcoin season. Remember, for altcoin season, what we want is to lose this neckline, the 2155, so we can start talking about targets like this. That should be amazing for altcoin season. If we do break out to the upside here, we get to encounter the last line in the sand before a bear market towards the upside. So really containing that 23.35%, I consider it a big win for this week. Not saying, well, now the altcoins are going to start pumping, but overall defending that line and then losing the white line is what we want. So one step at a time, I guess. And insisting with this Bitcoin dominance, it's looking like bottoming in here. So there's still a potential 1 to 2 weeks of retest that's on the table. It's possible, okay? It's not discarded, but I'm not necessarily saying that that's the way it has to be. The USD dominance, you can see how it's gaining momentum in here. It managed to push all the way this week from 45 into 52, putting a higher high on the RSI and breaking out from this pattern in here. It broke from the 4.5 and it managed to close at 4.69. And Ethereum dominance got really close to our target of 12%. It pinched 12.63, so just very close to the target. And Ethereum still hasn't managed to respect the full retest at 60, so it's slightly below it. It managed to put a low at 3.8k, 0.25. Remember that this range between 3.9 to 3.5 is where I call it reaccumulation for Ethereum. For a bullish case, I prefer not to have to re-enter the triangle, definitely not. Let's look at total 2 and total 3. Starting with total 3, we got one cycle 2017, second one 2021, and this one in here that is very disappointing, we have to say, for altcoins. So far this is building a flag in here, and we can place this line connecting the tops, and that is giving me 85.50. That brings in a potential extremely bullish target. I am not sure we really can get that high. I will support something that goes in between these two things, not the full top, but hey, more than happy to be wrong. And that comes in at 3.79 trillion. This is total too, so it just excludes Bitcoin. Definitely Ethereum should play a role in here, helping move this crap from 157 into 378. That's more than twice the market cap. And also notice that support, if we get a rejection from the flag, because we are right at resistance, so we need to talk about the next support, that is RSI 50 on the monthly, and that comes in at 105 trillion. So that's a move down of 31% in the total 2 market cap. Now, if we look into total 3, which excludes Ethereum, we can do a similar kind of analysis, but in this case, since I don't have one more cycle to the left, I'm gonna have to use the handle of this flag and place it like this, and it pretty much gives me the same RSI, that 8550. It's also kind of the target on total 3. This time is located at 2.27 trillion because Ethereum is not part of total 3, therefore there's less market cap to move. And the support this time is at 736 billion. As I say, you're not gonna go anywhere tonight without looking at the ratios chart. They are really giving very insightful information, and you want to watch that in the double free fall video that I published 1 day ago. Now, as with every single video, I'm gonna do a summary, but since I don't have a team over the weekend, I'm the only idiot working on the weekend, there won't be a video summary separate that I used to send every single working day to my members in YouTube and to my Patreon subscribers. And the story continues to be the same. At the moment, the bears have conquered the 4-hour time frame. They are in control, and they could pinch the global support on the 4-hour again. They could potentially drag the daily into 26, which is around 102.7. So if you ask me, adding at 107, if we go there, I am between not adding or adding so little to just do it for psychological reasons. I did add there, but really, if this rejects this level and we remain multiple days below it, the most likely scenario is to touch or get very close to 26, which is a price of 102.7 in confluence with this descending channel. We are in a bullish order block at 108 in here. As you can see, that is the defense, but we've been already there. Okay, so very thin, very difficult to assess in here how much this order block can help, because we have been here, and the most likely scenario is to put a new low in here at 106, but then we're so close to just pinch the daily support, the global one. So I have to be really greedy with the amount that I add at those levels, as I explained on the 50 weekly moving average in the video yesterday, and in the volume profile when I compare 2021 with now. How could it look like a failure of the current cycle, just like the previous cycle, in ending? How will it look like, and how can we prepare ourselves while being along to kind of rescue it and come out elegantly, and then maybe even taking a short from that bounce, dead cat bounce into the bear market. So I hope you find valid and informative, useful, valuable, or whatever you want to call it, all this information. I'm off for today is 10 p.m. Thanks for watching the video. Hit a like, write down a comment. I'll see you in the next one. Bye bye.